Good morning to you. Today is Thursday, the 2nd of April, 2026. My name is Francisco Gaffney, and this is my daily streaming all about governance, risk, compliance, and advisory boards. Yesterday, I talked about systems and resilience, how to stop weak controls, weak ownership, and weak evidence from leaving the board, executive teams, and founders exposed, right? But stability on its own is not enough. Business can be controlled, compliant, and still slowly lose relevance. And this is the thing that we're going to talk today. That is why today is about edge, right? So your innovation, your transformation. And what happens in many companies, actually, if you see the cycle of an enterprise, it goes from startup, growth, stability, and then decline or sell, right? So these are basically the four stages. Now, a company is already established. They will go or should go through those stages anyways all the time, because the keyword that I mentioned here is relevance. I'll give you an example. Companies that are, actually, as a real example that happened a couple of weeks ago with a fashion company. They were struggling because actually they started to realize that their audience was declining, not because of the cheaper, like cheap products that are shipped from China for other countries, actually for $1, and with they were declining because the people that perceive their brand as something of quality, as something of relevant to their social environment, etc., was started to edge and moving into a different kind of models or kind of fashion, and there were no replacement because the next generations were thinking about different things that were have nothing to do with the prior generation of customers, right? So when you look about this edge, how you continue progressing, transforming yourself, reinventing, innovation, is many times about the relevance. It's very important to be relevant. So the parts of the system where the board executive system, executive teams and founders decide what the future is requires to build is not just risk avoidance, is how relevant you become into the future. And let me pull the model again so we have a graphic view of where we are sitting today. So we are on the left, and this transformation, reinvention, and edge, and it's all related about your brand, your strategies, and your performances. Now, we are going to disclose many of these things. I'm going to go through several statistics because it's very important, because sometimes you say, how am I going to go into places that I don't know, into the uncertainty of the future? Look what happened in Q1, in the middle of the quarter, all the changes that happened due to this conflict in Iran, right? Well, not a conflict in Iran, in the middle. Anyway, you understand what I'm saying. So the geopolitics completely changed everything. Now distribution hubs in Middle East are under close scrutiny. How the people are going to distribute, because many of the trade of the world is going through now close to these areas of conflict. You know, the Suez Canal there is in a pretty much just at the edge of the conflict. So say, what is going to happen with my cargo? Should I go to a different route? How much is going to cost me? And the ramifications are everywhere. Now, so talking about these situations, this is probably one of the hardest truths. Many boards, executive teams, and founders delay change because the old model still produces enough cash to hide the urgency, right? Remember the four cycles of an enterprise. So you have to start to behave and way in some way or how as a startup again to be relevant. So what happened with boards and teams? They tell themselves they are being prudent. In reality, what they are is often there is that they are late. The market moves, customer expectations shift, new operation models arrive, regulations and geopolitics reshape investment choices, as we mentioned. So then the board, executive teams, and founders wakes up and calls it a sudden change. Okay, we have to reinvent ourselves, even though the signs had been in plain sight, perhaps years before, or months before, or quarters before. But nobody, even if they were flagged, there was no actions. So this is where I come in as the board advisor. I build rotating international advisory boards around the milestones in front of the company. So you get the specialist capability you need in a fraction of the time it takes to hire one executive to do this transformation, and probably will be obsolete 1 year afterwards, because after the transformation happens, you have to execute and operate a transformation. So somebody can come, and if you hire somebody, could be very capable, very experienced, very resourceful in terms of transformation, but then you have to execute and you have to deliver and then you have to operate that. And that is a completely different set of skills and capability, resources, and expertises. And how I do it without the consulting overhead, without the talent locked in, and with the members swap every 6 months as the projects evolves, as I mentioned. So let's deep dive into this right now. We're going to strip it down. I'm going to strip it down. So reinvention is not about looking modern. It's about making sure the board, executive teams, and founders are not protecting the model that is expired already, but becoming relevant, more relevant for customers, suppliers, and future business, right? So let's start to look at some statistics, because I think this is important to understand the environment, how other companies are behaving. You can translate, I'm sure, if you're listening from other country, these statistics happen or are collected in every country in the world, right? And I'm sure that in your country there are models or guidance or statistics similar to this one. So why I mention these statistics, and it's very important, because you when you're going into future pacing, what is going to happen next, there's a lot of fog. Well, I don't know what's going on, it's too risky, we cannot jeopardize our own operations and revenues, etc., etc., uncertainties, ambiguities, etc., etc. But I'm going to mention one here that is quite important, that I think that you're going to like it. So the first problem is waiting for certainty, as I mentioned. So the Office of for National Statistics says that 15% of businesses reported that they planned to adopt some form of AI technology within the next 3 months, and that was issued on December 2025. So actually, the next 3 months already passed early this week. So we are transitioning this process, right? So that does not mean every business should chase AI. So it means the pace of change is raising, and the board, the executive teams, and founders does not get the luxury of pretending the question can wait another year. In quarters, the things are changing, and AI is accelerating these changes. And we are going to see something with the accountants, what's going on, and collections. So there are softwares now that are accelerating the collection processes. And what happened with that is that many of the companies that they are having trouble with cash flow, the problem is not that they are operating incorrectly. It means actually the workflows that they have are not right for collection. And I have a very, very interesting case. We helped a company last year from between Q3 and Q4 2025, they doubled the revenue, not because they sold more, not because they did something new, just because they introduced not even AI. They introduce a better, or we introduce, or help them to introduce a better workflow in terms of cash collection or invoice collection. Their own revenue was not needed to go and do something different. We studied what were the cash flow issues, and we found out. I said, what happened with all this collection? Why are so delayed? Right? And I mentioned earlier this week a company that we're starting to help 1.2 million invoice delayed or not collected for the past 9 months. What's going on there, right? So it's not that you don't have the capacity to collect, is actually the workflows, and I'm not mentioning technology, just the systems, the processes that you follow to get that collection hitting your bank account are not good. So if you inject AI to it, what will happen? More problems. It's not going to solve it for you because the workflows, the system, the process is incorrect or is not performing at the pace that it should. Now, let's take a second problem, is treating transformation like a side project, right? And here's some stats from very interesting companies. Deloitte says that 59% of CFOs or financial officers are more optimistic about AI potential to improve organizational performances. And 96% expect the UK's company invest in digital technology and assets to rise over the next 5 years. And then comes EY, Ernst & Young, and says 78% of UK CEOs have altered their strategic investment plans in the last 12 months, 2025, due to geopolitical or trade policy developments, right? And 96% of them says they will invest in AI over the next 12 months, which is actually happening right now. So the boards, executive teams, and founders are not being asked whether change is coming. They are being asked whether they will shape it or react to it late, right? Now, as I mentioned earlier, I'm mentioning AI because I think is a hot topic, and that's why I wanted to pull something hot, because everybody's asking about AI. Also, you have to see the other side of the coin. Gartner already predicted that 40% of all these projects are going to fail in the next 2 years. 40% of them. The reason why, and the underlying reason, is because what I mentioned about this example of cash collection. The problems is not AI. AI is not a magic bullet, is not a solution for everything. The problem is that your systems, your workflows, it doesn't matter if it's collection, sales, development, documentation management, you name it. The workflows, the systems are to be reviewed and optimized first before accelerating them or improving them with other tools, right? So bear that in mind, because when somebody comes with a flashy project about AI, look first what's going on in your current situation before investing in anything else or considering to invest in something else. The third problem is strategic with no edge, right? So, and here is where I love these stats, because many people say, we cannot, we are alone here. This is too difficult. How we're going to go to plan the next 10 years, not even the next 10 years, from now to the end of the year 2026, to the next 9 months, right? How we're going to do it is too confusing, it's too blurred, it's too foggy, uncertainties, ambiguity. I had a meeting yesterday with a very, very skilled group of investors and merger and acquisition group. And one of the biggest concern was, or the conversation actually, let me put it there in the right context. The conversation was revolving about if it's going to be a recession or a stagnation, right? I mean, in terms of the cost of petrol, the barrel, the crude, and this and the other. And the conclusion that we had is actually, you know what? This is another crisis out of the many crises that we lived since the early 2000s or mid 90s to date. This is another one. And we've been through a severe one, which is the pandemic. So you can imagine that this one, at the most, I think there will be a stagnation. So people waiting on the sidelines to see what is going on. But after the summer or early to the end of the year, things are going to start to move again. And this is not a prediction. This is not a forecast. It's a personal impression based on almost 30 years in the markets. Things are cyclical. They have their processes. They have the digestion time. It's like a summer, autumn, winter, and spring again. So probably we are here between a late autumn, early spring, I think that that's the situation today. I don't think actually it's going to be that worse. So when you have these uncertainties, you're looking to the future and say, how I'm going to go and have an edge? How I'm going to be relevant in the market with all these changes, or when the people are looking into the sideline, by the sidelines. So here's an interesting piece of information I want to share with you. The UK government's industrial strategy says that it's a 10-year plan to increase business investment and growth, the industries of the future. Yeah, they have a 10 years plan for the investment growth and industries of the future, with sector plans for 8 areas with the greatest growth potential, right? Why I'm saying this? Because the national direction of travel is very, very clear. Growth will favor firms that can position, partner, and invest with purpose, right? That's your relevancy, your edge, your future, your innovation, just your transformation. And why I'm saying this? Because if a national body like the government industrial strategy says that they are planning for the next 10 years, and they publish that plan, by the way, in 8 defined sectors, then, and you say, well, you're too naive. That how did that come? Because you already have a guideline, a framework. Is what is better to do, to be associated with a national plan for growth strategy in one of these 8 sectors, or just to do it by yourself, trying to miss and try and miss, or try and error all the time. But if you look into whatever is already that plan, I can assure you that you're going to be way better in the long run than if you try to yourself, or you literally stop doing anything and say, well, we are going to keep going like this for another year and we see what's happened next, right? So yes, it requires some kind, as I mentioned at the beginning, the cycle of the organization, of the enterprise. The first one is startup. You have to bring that startup energy to your organization, but you have a very nice framework. Is the government's industrial strategy for the next 10 years. So if the boards, executive teams, or founders still speaks in broad ambition but cannot name the one capability, one offer, or one market advantage that makes the business harder to beat, then the transformation is still a slogan. So you're still having a lot of discussions, but actually, effectively, nothing is happening. Now, in other words, imagine reinvention is like changing lenses or changing, no, imagine reinvention is just changing lanes on a fast motorway. Yeah. If you leave it too late, the gap with the guys behind you start to get close and you cannot do the change. Or you move without the signaling and you can cause a car crash. Yes, your company could be crashed. So make the right signals, do the right changes, go at the right speed. Yeah, you can go slow and arrive to destination too. But if it's, remember, it's a motorway. We are not in country roads anymore. We are not in single line environments in terms of technology, in terms of economics, in terms of social changes. We are in motorways environments. So you have to go at the minimum speed, or you are going to be pulled over and say, you cannot drive here anymore. Sorry, because you are too slow. You're dangerous for the rest of the drivers. In this case, it means another things in terms of business. But I think that you understand what I'm trying to say. So as the board or executive team or the founder, your job is to see the move early and make it clean, right? Move early and make it clean. That is your edge, your advantage, your transformation, your innovation. So here's a real challenge. If the board or the executive team or the founder accept that standing still is a risk, how do you decide what to reinvent, what to keep, and what to stop, right? So if you're still thinking and risk, what you do, what you stop doing, what you keep going, or what you literally disregard. And as an advisor, I would suggest 3 things. The first thing is define the edge in plain English. What do we do? What we know? What we own or reach that others will struggle, that can copy from us, right? So your advantages, and we spoke about IP, is exactly, sometimes it's that thing. So it's that thing that the others can copy from you, and you can make it better than anybody else. So exploit that big time. And I think I brought an example one time about this, that we were in a machine shop, and they developed through the years, and they spent around 500,000 a test bench, and they had that thing at the back of the machine shop, and they did it for the quality of material, stress material, memory material, memory, etc., etc. And that was their quality edge, right? And when we found out in working with them, we suggested that they put a licensing, a patent, and to two things: to create a secondary revenue stream to other machine shops that they wanted to stress test and test material, memory of materials, etc., with their bench, or to buy the machine directly from them with a nice royalty and licensing attached to it. And that created, and is creating now, a fantastic secondary revenue stream, that something of research of their own research of development, or the in-house research of development, now is being a secondary line of business for this organization. It's quite amazing. So this is a kind of reinvention, transformations, and things that actually can help the organization. Sometimes it's not to go and to do something flashy. Look inside your company, what you have, and many times the solutions, and very good solutions, are already there. So the second thing I suggest is choose one reinvention bet at a time, one at a time. If you do too many, just literally it's too confusing, and your own teams, your own suppliers, your own customers are start to get confused, and that doesn't help. So choose one at a time. And the third thing that I suggest is treat partnerships and capability shifts as part of the strategy, right? And this is related to the second suggestion, one at a time. Because if you do too many changes too quick, what happens is actually people get confused, and then the priorities start to shift from high priority to low priority, because say, well, I really don't know, because last month was this month was this, or something else. I cannot invest more time in this organization when probably I'm going to change again next month. So transformation speeds, when the board, executive teams, and founders stop asking who is available and start asking what expertise this milestone truly needs, and do it one at a time. Now, if you want to push it one level further, if the transformation path changes every 6 months, why will you lock yourself into one board shape for 3 years, right? Or one talent. I mentioned this already at the very beginning. So how I can help? I can help with the outcomes at the board that not only preserves value, but also adds value. I helped create a next wave of it. You get sharper strategic choices, faster access to specialist judgment, and a better chance to move before the market forces your hand. Yeah, you don't want to be. I realize that you're not relevant anymore, and then you have to do something, or you are going to collapse. How I help you to differentiate? This is where the rotating advisory board model becomes especially useful. So transformation milestones change, the board mix should change with them. So one stage may be digital transformation, pricing and product capability. The next stage may need market entry, partnerships, and investor readiness. So my model is built to rotate expertise around the work, not trap the company with a static board designed for a different chapter, right? Now, in terms of, there goes a pen. In terms of risk reduction, I help you to, because the reinvention often fails when companies overload internal teams, hire too slowly, or bring in generic consultancies that understand frameworks better than the operating realities of your organization, right? Now, one action you can take home today, and it's doable in 30 minutes or less. Ask your teams to spend 25 minutes on a single question. If we had to create 20% of next year's growth from a different source than today, right? So something that is different than we are doing today, and is created 20% growth, where would it come from? And what capability is missing to make that real? right? So I want to grow 20% by next year with something different that actually doing, where it's coming from, and what capabilities we are missing that will make that reality. So if you are a advice chair, non-executive, founder, executive team, and you want an international advisory board built around the milestones in front of your company, so you get transformation and reinvention capability faster than hiring one executive, and I do it without consulting overhead and without the talent locked in, book a 30-minute call so I can understand where you're standing today. And from there, we can see what is the assessment that we need to do and show you how this section, which is edge and reinvention, will work in your business. So let's pause it here for today and reconvene tomorrow, because tomorrow I will pull the whole week together, because scale, predictability, resilience, and reinvention, which is the whole ecosystem, only become powerful when the board runs them as one operating system rather than four separate conversations. Have a great day, and I'll see you tomorrow. Thank you, and bye-bye.